Okay, we're going to go ahead and get started. I'm sure some other folks will join us as things move along here, but for now, we'll work with who's here. As I said, everybody who joins us this morning, you're currently muted. My name is Chris Schwartz. I work with NAI Keystone. Today, we're going to have a presentation from Steve Willems, who is the managing principal of NAI Keystone. And Steve's going to spend a little bit of time sharing the 2020 first quarter outlook with regards to industrial real estate, very specific sector. And we hope that you're all well and you're all safe. And just wanted to let you know, if you have questions during the course of this, please type them into the chat interface at the bottom of your screen. And we'll be capturing all of those. And at the end of the presentation, we'll answer as many as we can. And if we don't get to your question, we will answer it via email at the end of the program. So thank you for being here today, and we'll turn things over to Steve.
Thank you, Chris. Welcome, everybody. Great to see familiar faces, smiling faces. Everybody's working from home. Masks or no masks. I'm alone in this is our corporate headquarters in Galen Hall, my wife's little office, which stands in for the why missing spot where I usually am. We want to try to do this on a quarterly basis, and we'll alternate back and forth between industrial and office. With the pandemic and the economy being completely shut, the events of the day really dictate that we get a tighter handle on what's going on and work with our customers and our clients to get the messaging out in all directions. So this is one manner that we'll use to do that. The manufacturing obviously is a huge sector in our county, in Berks County. We need to stay on top of that, and I think it leads into jobs. So everything we're going to talk about, I hope you will find relevant. I want to jump right into the first quarter stats. Before we do that, I want to talk about the Berks County market. What makes that up? In terms of industrial real estate, we are just shy of 50 million square feet, which sounds like a lot. It is a lot for us, but for comparative purposes, Lehigh Valley market is 135 million. So we pale there. Most recently, the logistics sector, which I'll refer to throughout this report, makes up the newest portion of our data. So we'll talk about warehousing, manufacturing, flex, and logistics space. Logistics, I would define as the 35-foot plus square foot or height buildings up on I-78, typically used by the e-commerce sector from Berks Park 78 all the way across to the other, Lenhartsville, to the other end of I-78. That's our newest sector. We track 493 industrial buildings, over 10,000 feet in the county. We have tracked these by quarter since 2003. We try to monitor who's where, what they're paying to the extent we can find out on leases. Sometimes leases are a little more difficult, sales or public record, and try to keep a tight handle on that. So we'll give you some results on where things are relative to last quarter, the end of 2019. The Berks logistics set that we talked about really encompasses these buildings that are 300 to 1.2, 1.3 million square feet in size. That sector of our market is about 10 million square feet. And it's the newest because of the e-commerce primarily. We're in a very favorable location. We have labor to staff these warehouses and distribution centers on a more plentiful level, I think, than some of the, certainly as you get closer to northern New Jersey, which is kind of the epicenter. We have the labor to back up these DCs for picking and packing and sorting. The first quarter stats reflect, looking backward, 2.3 million square feet of space was delivered into the Berks market in the last year, which is a big number. Most of this is tied to logistics set on I-78, Hamburg and Bethel being the two hotspots. The county had 224,000 square feet of net absorption in the last year. It's a positive absorption. It's a good thing. At the start of the month, we showed 3,454,989 square feet as being available. This translates into a vacancy rate of 7.63%, which is a 1.5 over the fourth quarter of 2019. In the logistics set, there are 3.7 million square feet of vacant, and we understand there's proposals being traded for at least 1.5 million square feet of that to national retailers and e-commerce providers. We don't expect that, despite everything that's going on, we don't expect that to slow down. If anything, certain people are turning more to e-commerce as to traditional shopping, and that will negatively affect, if we ever did a retail report, it probably wouldn't be pretty. So we're focused on industrial today. About 3.6 million square feet is under construction in Berks County. 27% of this space is reportedly pre-leased. There is another 3.5 million square feet in the initial stages of entitlements where developers have tied up sites, have contracts on sites, are pursuing zoning and their land development, subdivision land development for Saldo. So a lot of big property out there on the horizon. I expect to see that all those that are being planned on paper are going to stay on paper for the foreseeable future. But certainly everybody that's under construction is going to complete. When we look into who are the owners of the logistics buildings, these are national real estate investment trusts and developers that are backed by equity groups, very deep equity pool. They're not waiting for a local bank to give them a loan. These are things that are being put up on spec and for customers without any regard to the financing. So it's a strong part of our market, and we expect that to keep going. We've had about 2.2 million square feet of logistics space that's come online in the last 12 months, and certainly accounts for the overwhelming majority of the new supply. I need to talk about my numbers at the vacancy rate. I just told you that we had a vacancy rate effective. I call it an effective vacancy rate of 7.63. For those of you that subscribe to CoStar and see some of their reports, you'll see it's 15.7% on their report for the first quarter. That's been the case for the last decade. We have fought the numbers. We do not count many of the buildings that they count. As an example, 500 North 3rd Street in the city of Reading is 125,000 square feet on the better part of an acre. It's 3 stories. The sprinkler system hasn't functioned in years. It's not occupiable, but it's on their report. It skews the numbers. Many buildings like that. Plus, there are many buildings that are good buildings that are shown as available for lease, which in fact are being used by their owners until they're leased. So there's 2 of them in a row right on the Blandon Park Road that are full, but yet the owners are saying, you know, bring me a tenant and I'll move my stuff to the side or out to another building. So by making those adjustments and taking out those multi-story buildings, we come up with a much more attractive and competitive market set at 7.63, which is certainly holds its own in terms of the regional market, what's going on in Bucks, Montgomery, the Harrisburg markets, Lehigh Valley, very respectful. 15.7, not so much so. The 15.7 that CoStar shows. So we feel like that's a good number. Most of the transactions we're seeing are closing, that are in the pipeline, and those that will occur in this first and second quarter of this year were conceived, and most were financed in 19. So we think this pipeline will, on a short term, buoy our local real estate economy. We've had many closings in the last month, in the last week. We've had parking lot closings, which is very interesting, kind of surreal, where attorneys and bankers line up in cars and the title company, and we get things done. Never seen that before, but where there's a will, there's a way. So these are good things to happen. The question that we're going to have moving forward is what happens when this pipeline empties. We've talked to many other prospective industrial users, and with a few exceptions, let's wait and see. Let's let this blow over. We'll talk to you next month. We'll talk to you, in June. So it's a concern moving forward. Diverting from the first quarter results, they're just to the COVID-19, the CARE program and other news. If you have any kind of business acumen at all, you're certainly have already availed yourself of the SBA loans and the PPP program. If you need help, please check our website, NAIKeystone.com. We've got all the links lined up in a row for you. We try to pick the best of the best and make it easy to find. Besides the SBA, for 1031 buyers, people that have engaged themselves in a 1031 tax deferred strategy, the IRS did I think yesterday, rolled out a 90-day extension subject to certain restrictions regarding when the process started, but that will allow you to a little bit more time get past this to identify and close on your property. Looking forward, we're seeing that we're seeing and expecting that inventory levels that have operated on a just-in-time basis may move to a just-in-case basis. There are certain things that you can just never have enough of. So we expect to see warehouses chock full of toilet paper anytime soon, things like that. So we expect inventories in some areas to jump quite a bit. Others will subside depending on what the business is. Remember, everything that we consume is carried on a truck at some point. So logistics and trucking, we believe, is going to remain strong. We believe that the companies that are lined up to acquire capital-intense equipment will be postponed at the very minimum. That could affect some of our manufacturers because we do have some folks that create things that are sent around the world. We see that the stats for the China exports have slowed dramatically. That could be a concern for our manufacturers because if they're missing a piece or a part that integrates within something they're doing, they might not be able to finish their production. In a recent survey that came out yesterday for investors in mainland China and Hong Kong, 13% of the respondents said they plan to increase U.S. investments. 28% said they would maintain current levels, and 16% said they would decrease their U.S. outlays. That 16% is double from what it was the prior month. So other distributors we're concerned about that might provide services or supplies to businesses like restaurants that are shuttered, equipment, paper products, plastic products, the supply chain volumes are going to dip down, and it might take a long time to get out of that trough. We understand that our biggest employer, East Penn, is back to 55–58% of their workforce and capacity, which is a good thing. They got their exemption. There are other large manufacturers that we see that have just gotten their waivers right now, or I know just got theirs. We've talked with, we work with the senior management at Redner's. We understand they are experiencing a 29–30% increase in sales, all with fewer workers that are working harder. And these people are real champions to show up every day and do what they do. But it's a big boon. But other food service items and manufacturers are slower. You know, from our chocolate companies to our confectionery companies are slow. Fruit, meat. There's lots of other food companies that are running on a very slow basis, which is not good. We are seeing sale and lease deals close, as I mentioned. We have lost a couple of companies in our marketplace due to mergers and acquisitions in the last year. These are companies that have been around for a long time, that have done very, very well with the ramp up in the economy, and have done so well that investment groups and other people have bought them. And I know I lost two, one to New Jersey and one to Connecticut. So it's a byproduct of the boom in the economy and them doing very well. But sometimes we lose them, and that's not a good thing. One of the last things I want to touch on is tenants in industrial situations. There are many that are not paying their rent. In a couple of industrial parks that I'm aware of, that's in the 20 to 30% range, which is a real problem for both tenant and landlord. If the tenant is not current with their rent, they're really not, they can't avail themselves of the SBA loans. They have to be current with their rent to do that. And there are many programs out there that can handle and help them. And of course, when they don't pay their rent for the landlord, it's a problem because they still have mortgages to pay. And in many cases, these are backed by CMBS loans, which are very, very difficult to alter or change. It's not like calling your local banker saying, you know, add my payments on the back end. There's no retrading, no renegotiation. The bonds back that up, and you know, people need to be paid on the other end. Megan, we do have a chart. We decided not to do this as a chart heavy presentation because we just want to be able to see you guys and interact with you. We haven't seen you. I think a couple of you need a haircut though. Megan, put that first chart up showing the rates for the marketplace if you can. So, okay, well, we'll start with vacancy. That's okay. Vacancy rates, you can see those lines are pretty much in the trough in 18-19, slight uptick first quarter of 2020. That represents bulk warehousing, manufacturing, and flex space. So they're really not any big changes to see. I'll leave this with you for reference because come next quarter, we're going to see some upturned lines. It's important to know where we came from, you know, and where we're going. Megan, let's show the other slide if you can. So this talks about just the rates on a dollar per foot basis for a typical warehouse. I should say that these are typical warehouses in the general industrial market. Think Muhlenberg Township, 21, 22 foot clear type buildings. So they're in the $4.50 to $5 range. The flex are much more, but those rates are pretty steady, and we will have to wait and see where they go from here. The rates on the logistics buildings, many of them are in the mid to high fives per square foot, and they're coupled also with very low operating costs because most of them have availed themselves of the LRTA program, local economic revitalization tax act, where the taxes are abated 100% for the first year, by 90% the second year, 80% on, so on over a 10-year period. So it's a step up. Thank you, Megan. Take that down. So as people walk into a nice new building, the rates are not dramatically far away. there's some pretty nice buildings that are going on. We do have a couple of nice buildings that are in the market today. The former Fleetwood Fixture building in Leesport, 287,000 square feet. Very, very nice, high quality building, super flat floor, heavy infrastructure. It's right for a manufacturer. You've got some new construction going on at Berks 222, that track just north of Walmart in Temple. I sold. There's 270,000 feet there. Those floors have been poured. The walls have been poured, and they're actually laying down on the floor. They need to be tilted up and finished. So they're about 90 days out from completion. Very high quality buildings, which will be an asset, to our market. Other buildings.
Steve, we did have one question that was texted in. We'll throw it out there if you want.
Go right ahead.
Has it.
Myself. The question was, is there any region you see growing quicker than others, either currently or once we get through all this?
Good question. I think you're going to, I'm not sure about region, but you're going to see more development than ever yet on these main arteries on I-78. Everybody wants to be closest to the port, and closest to the Northeast. Many of those users that we see occupying buildings in Charlottesville, Hamburg, Bethel, Lenhartsville, Fryestown, they take their product up into the Northeast market. It's a one-day truck drive. They're far enough out where they can get a little better economy and a little better value, but it's still a one-day drive. The timing rules for truckers has tightened up quite a bit. So you can only drive a truck so many miles and so many hours a day. It's important that you can get a truck there and get them back. From our area, I see that as being following that line through the Lehigh Valley. Lehigh Valley is going to continue to grow all the way through into northern New Jersey.
Okay, thank you.
I had one texted me because people weren't sure that you would want to answer it, but you touched briefly on tenants who are either not paying rent or asking for rent abatement. Is there a standard answer to that? How are landlords or building owners handling that situation?
Well, there is a standard answer that I've seen, and I've seen this in a bunch of buildings. I'm not sure how it's going to work out, but the answer is you must pay your rent. You have an obligation. You entered into an agreement with us. You need to avail yourselves of the SBA. And if you'll show us that you've have applied, and if your application is pending, we can certainly waive late fees and work with you on that. If not, we need to see your financials. We need to see a balance sheet so we can see what kind of cash you're sitting on. We need to see, are you still paying salaries? Have you taken a cut? Have the senior, as ownership, taken a big cut in pay? I know I've heard stories of some companies that have either suspended their pay to themselves or cut it by 80%. Those are the kind of things that banks like to hear, that everybody else has sacrificed a little bit first before they're being asked to take a haircut. So we'll see how that works out. Question is going to be April rent. We're 2 weeks past that. We're only a couple weeks away from the May rent. What happens if it goes to June? It could be a big thing. And again, it's for the CMBS backed loans, very, very hard to work with special servicers or multiple servicers to try to get any kind of relief. They're overwhelmed with requests right now.
Okay. That's the extent of the questions that we had. If none pop up here in the next second or two, we're going to let everybody go. And we certainly do appreciate taking the time. Steve, do you have anything to close with?
No, it's good to see everybody's face. We'll try to do this again on a quarterly basis again. I think office could be a very interesting call. What little bit of office I'm thinking about is, how many people can you, the trend had been that the 4,000 foot building that used to have 20 people in it, most recently had 40 people in it because you wanted to try to get the most value out of it. We might go backwards now. and people spreading out into more private offices, and it might be some people working at home, and some people are getting used to it. Not sure I'm one, but well, thank you all for joining today.
Thanks. We'll see you all. Probably get an email from us, and we appreciate you taking the time to spend some time with us. Thank you.
Bye now.